You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time, once again, for the option block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-expanding, soon-to-be 14, maybe even by next week, we'll see, 14 programs here on the old Options Insider Radio Network. And where can you find all of that options and indeed derivatives goodness? Well, the mothership, the flagship, the destination of choice for the discerning options user, theoptionsinsider.com. While you're there, of course, lots of ways to get there. You can click on the Insider Radio Network tab, top left corner of the page, or just on the call out right there on their homepage right there. You don't have to click even beyond that if you don't want. And we even make, of course, what's the latest episode right there in the middle, top right below the Insider Radio Network tab. You'll see the player with whatever the most recent episode is, maybe of whatever program is the latest on the network. Could be Options News Rundown, maybe Option Block, Vol Views, Advisors Option, whichever one is the latest addition to the network, whichever one is the latest release, it'll be there for your listening pleasure. So you just want to go to the homepage, click on that, and stream right there. You can do that. We make it really easy for you. And of course, while you're there, read some articles, click on some fun stuff, breaking news from the options market, etc. A lot of great news breaking right now. We're going to get to that in a little bit. I go away for a couple of days to Puerto Rico, and the whole industry just goes crazy without me. But I'm back here to sort it all out. And I'm pleased to be joined on the old program today by our usual cast of characters, as well as an extra. It's Thursday, so we thought we'd work in a guest for you. Let's start with him to mix it up. You may remember him, listeners, and his deep baritone from his myriad appearances on our much-beloved, much-bemoaned Futures Options Roundtable program. Well, he's back today to talk some futures options. He is Nick Howard, the founder and CEO of Bantix Technologies and the creator of QuikStrike, my own personal favorite futures options analytics platform. Nick, welcome to the Option Block program, sir.
Thank you, guys. Pleasure to be here. Looking forward to contributing any way I can. So we'll talk to you soon.
I love it. You can just feel that deep enthusiasm dripping off your voice, sir.
Yeah, you're making me laugh. I mute myself when I laugh, and then I come back again. No,
That's
I'm ready
my job.
to go. Whatever you need from me, I'm here.
That's my
Thanks
job, is to make it nice and hard for you today on the show. Nick's doing a warm-up run because he and I are going to be diving into the deep end of the pool in about a week, so we'll stay tuned for that, for a little bit of tease for that. Speaking of teases, for those of you tuning in, hey, you want to see who won the big options broker madness sweepstakes, the drawing, stay tuned. We're going to announce those winners in a little bit. Got some news on that drawing as well, which is kind of interesting. But before we do that, let me introduce my other cohorts here. My partners in crime, starting off all the way out in the hinterlands of the duchy, nay, principality known as Maine. We are joined by none other than the rock lobster himself, Mr. Andrew Giovinazzi of Option Pit infamy. Mr. G, welcome back to the program, sir.
I am still infamous, and I'm still in the Duchy of Maine. Both are still happening.
I go all the way to Puerto Rico, but some things never change, sir. By the way, able job in my absence filling the hosting chair. I know it's not an easy thing, particularly doing it live and doing it remotely as you had to do, but well done, sir. I take off my hat to you if I was indeed wearing a hat.
And I have to say your producer was very helpful. Very helpful. And she created no umbrage at all ever.
What fun is that? Part of the job is to tweak. People don't know what goes on behind the scenes. In addition to hosting, I'm doing all kinds of fun stuff behind the scenes and pushing buttons and writing stuff up and everything else like that. So the producing job is a fun one. In addition to the hosting job, she just had that one last week, and she did an able job. You're right. Maybe we'll have her fill in for me more often as I am traveling about hither and yon at various locales. But before we do that, let's turn our attention to one last locale, that sleepy little hamlet known as St. Charles, Illinois, where we are joined by none other than Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. Able job to you as well last week, filling in my absence, sir.
Thank you, and welcome back to you as well. I hope you enjoyed Puerto Rico.
It was an interesting time. Never been there before. That was kind of fun in and of itself. Certainly not the typical conference destination, even though I wish more of them would head there, maybe rather than a random golf resort X in the middle of Florida. But c'est la vie. It still works pretty nicely over there. And speaking of working nicely, let's get to it. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where you break down what's going on in the market today, what was happening, what caught our eye in the broad markets today. And it's been an interesting week so far. Here we are recording this Thursday, April 7th, for all of you playing the home game, a week and a day from tax day here in the U.S. So for all of you still working on your tax forms, in particular probably your Schedule Ds for a lot of our listeners, well, get to it. You got a week and a day left to do it. But speaking of the day that was, today was an interesting one. Pretty much mostly downside on the old street today, with most of the major indices closing off over 1%. The tech-heavy NASDAQ leading the charge to the downside, off about 1.5% today. The S&P, kind of the Goldilocks, the middle child there of the group, only off about 1.3%. And the good old Dow, ever the laggard, though in this case, if you're a Dow bull, maybe you're happy with that, only off a little over 1% on the day today. And there's a lot of other things to get to, but we have a pretty robust panel, so I'll give them a chance to weigh in as well. Let's start close to home. Let's start in the land of St. Charles. Uncle Mike, what caught your eyes in today's activity, sir?
Well, markets were down today. I think just with the Fed minutes coming out yesterday, apparently the market liked what they saw initially, but maybe changed their mind a little bit today, because we did rally into the close yesterday, which I thought was very interesting. Some people were saying, and just listening to the financial media today, that, well, oil's down today, so maybe that's why the S&P's struggling again. But the reality of it is that oil's down 31 cents. I don't really think that's necessarily the cause for what's driving these markets down. But on that note, we are down. Other commodities are higher on the day. We have gold as a higher commodity on the day. The only other thing with which I'm seeing that is kind of giving me a little bit, piquing my interest a little bit, are just some various stock names. McDonald's, for example, they're up. So I really think that that's kind of a sign of strength with McDonald's, and that they don't have an earnings announcement coming up in the near future. But with that, a couple of other individual stocks that were up on the day and a down day, 3M, although it was only up a minuscule amount, it was still up on the pretty intense down day. So with this seems to be more of a tech-driven bear market today. And that most of the secure names are a little bit more stable. Although Facebook's only down 7 pennies, but it did get pounded the other day. So a lot of interesting things today, but really not a lot of consistent things to say, oh, that's why it's happening.
Well, since you mentioned you invoked the commodities, I will now turn our attention to our guest co-host here, Mr. Nick Howard. He is the man with the data over there in the realm of all things futures, options, commodities, and the broad indices as well. So, Mr. Howard, that said, what caught your eye in today's activity? What was lighting it up over there at QuikStrike today?
I couldn't resist. I had to serve it up to you, Nick.
That's okay. He called me. I was in the bullpen when he called me, so I haven't been paying too much attention today. But I will. I'm looking at our reports, which is the whole idea of QuikStrike is so you can get information rather quickly without having to be too ingrained in what's going on at a given time. I mean, I'll start with the indexes since you did mention that part of the market first. Ironically, I'm just looking at the intraday volume numbers for the E-mini and the weeklies, and I think this week has been generally light from a volume standpoint. Today doesn't look much different, even with the break. Surprisingly enough, a lot of the volume that we're seeing in the short dated regular E-mini options is on the upside call. So, the at the money right now is 20-30, but I'd say that 80% of the volumes come from everything above the money. So that's always interesting to see. We started out around 20-60 overnight and then tailed off as the day went on. But a lot of volume on the upside there, and that's on the regular E-minis. On the weekly options, which are becoming more and more popular, we talk about those in some of the other shows, how and the exchange is real happy that these weeklies have become popular because it lets people really start to play with some short dated thought process about their trade, and the same thing's happening over there. So, just based, again, I've been out of the trading part of the market for a while, so I tend to give my agnostic viewpoint in terms of what it looks like just from the number standpoint. But even in the weeklies, the 1 day stuff, there's a week 2 option in the weeklies, and most of that intraday volume is taking place above the money. So, with that said, it looks like people might be expecting this thing to bounce prior to the end of the day tomorrow. So that's pretty interesting from that standpoint. As far as the other stuff goes, let's see. I'm just going to try to jump around a little bit. Ag market looks pretty light from the commodity standpoint. That's across the board. And then we'll take a look, and I know I've been watching oil a little bit just to see if the gas prices reflect what's going on in the actual market itself. And this week, I think, has sort of been more of the same, with the volume is really pretty low in general in the option market and this stuff. So we've been kind of sideways trading for a better part of this week, and I think for a little bit of extended period of time I was out of town for a period of time, so I wasn't paying that much attention. But pretty light volume, but just based on looking at the options numbers, it looks like people might expect a little bit of a bounce here in the minis or in the S&P tomorrow.
Yeah, funny you mentioned the weeklies because they were a big talking point at the conference I was at, surprisingly so, because it was mostly aimed at advisors and asset managers. You wouldn't think the weeklies would be a huge hit, but nevertheless they were. And one of the stats they threw out, which is something we've kind of mulled over before, but interesting to hear more hard data on it, was that a weekly is accounting for about 27% right now of overall ADV industry-wide right now. And that number ebbs and flows depending on the product you're looking at. Some are obviously a little bit more friendly to it, like SPX, the weeklies lighten it up out there, and even Apple and others, some less so. But overall, 27% of the industry these days lighten it up in terms of weeklies. So you guys are devouring the weeklies en masse out there, and interesting stuff to see how that ebbs and flows. And before we get into some other breaking stuff in the realm of options, we'll turn our attention back to the hinterlands known as Maine, where the Rock Lobster is patiently awaiting Sans Umbrage for his turn to chime in on the old All-Star panel. Mr. Rock Lobster, what caught your eye in today's activity, sir?
I could find some umbrage for being last. I could take some.
There's always umbrage over there, sir. You Mainers. No pleasing you Mainers.
We're an angry group. Even though I don't even count as a Mainer until you're like the 5th generation. Then you might be a Mainer. Then they start thinking of you maybe as a Mainer. Anyway, did anybody notice Mario Draghi saying these negative interest rates aren't really bad? I think we're going to try them, more of them. Does anybody find this puzzling that negative interest rates it's almost like the emperor's new clothes? Like, we're just going to keep doing this, and we're going to imagine that this all works, and everybody around us is going to pretend that this all works, and everything's going to be great. And I think that's why the market sold off, Because I'm looking at
one
this
way with
morning.
which to pay down the debt, charge people for holding their money.
Exactly.
Yeah, you're providing a valuable service, right? You're storing their money in a safe and secure location. Therefore, you should be compensated for that. I have no problem with that.
So anyway, I don't know how banks are going to make money. They used to make fun of Reagan with voodoo economics, and I think actually now somebody invented. They're actually, they really are trying to promote voodoo economics as a way, because the Japan, basically, there's been, that growth has stopped. The Chinese flirted with just debasing their currency, and it was a disaster, and they stopped, thankfully. I think, but the Europeans, they're gonna keep giving it a try. They're gonna, they like their welfare state. They don't want to change it. They don't want to do anything different. So they're just going to keep trying this and see if it works. And we'll see how it all works out. I don't see how it's going to work out, but I don't know. I look at this. I see VIX up 2 points. I saw us going sideways. I thought, the central bankers are just going to shut the heck up for a quarter. Not so. So I think anytime you hear a central banker utter anything now, I think we're going to see more vol. I think the market sells off because it's just the usefulness of all this stuff is becoming. I think we're past the what is it in economics? The rate of marginal return, or the return on margin, whatever that term was that I learned 30 years ago. The marginal rate of return, I think, on interest rate drops and monetary easing is now into the negative zone as far as stocks go. It used to be positive, now it's negative.
Yeah, but your utility on that money is through the roof. So that makes it up for everything. You're getting so much more utility out of that, so everyone's happy.
I guess so. And I think ultimately that is going to, it's destabilizing. That's all I can say. It's destabilizing until they stop doing it and start thinking of, better and, more useful ways to stimulate the economy, like trying to, stimulate people spending money and growth in businesses and, just less regulation, less this, less that. But hey, they've been pulling the wool over everybody's eyes now for 3 or 4 years. So maybe they can do it for another year. We'll see. So I have no bullishness in me right now. All I have is
just umbrage,
water treading sidewaysness. Yes.
Just umbrage and a clear lack of utility. You need to go back to those textbooks from 30 years ago. My favorite useless economic term of all time, marginal utility. I love it. But before we wrap up here on what's trading today, Mr. Howard, I know you had a few other nuggets leap to mind from your screens there. What's catching your eye, sir?
Well, no, I guess the first thing was the glories of doing a live show. I was on a bad tab, so I wanted to clarify a couple things for some of the volume numbers that I was talking about. We did have some key strikes that had high volumes on the downside for the S&Ps, and that was like the 2020 strike and then the 2005 strike. Okay, that was in the short dated stuff. So I want to make sure that I made that very clear, because I was on my calls page and not on my total volume page. But all in all, just given the market move down, we are seeing a great deal of volume on the upside still. So I think that there's still some favored move from in that direction. The other thing I want to mention, just based on the last comments, were I talked to a lot of guys that are brokers over in Europe, and I hope that this negative interest rates, if it lasts any longer, those guys aren't going to have jobs, because there's nothing going on for them in terms of the trade or the customers doing anything. So a bigger part of just how it's affecting the economy is how, the smaller part in our business is how it's affecting these guys that actually do the execution and actually talking to the customers. Nobody's doing anything, especially in the short-term rate market over there. So just a couple of things I wanted to clarify. So I apologize for that.
The magic of a live show, as you said, sir. And moving on to some of the other big things. A lot of stuff breaking since I headed down to Puerto Rico and came back in the middle of the night to have all this stuff going on. But one of the other big talking points at the conference, you might imagine, particularly for the wealth advisor asset manager crowd. And the talking point that was big and has been big for the better part of the last 6 months on our advisor's option program, and has even penetrated over here a few times, talked about it a few weeks ago. Andrew got his righteous umbrage in on it, is, of course, the Department of Labor fiduciary proposal, the exemption there, which essentially, I know it's so confusing, why is the Department of Labor weighing in on what should be an SEC thing and vice versa? There's a lot of strange bedfellows and bizarre occurrences and bizarre coincidences and bizarre opponents going on in this whole thing, and this whole proposal is 1,000 pages, so it literally covers all aspects of the markets and what brokers should be doing in a responsible sense, and fee-based accounts and everything else. And there's a lot to sink your teeth into there. Obviously, for our purposes, we're focused mostly on the listed options portion of that, and effectively it was a bit of an omission, a sin of omission. They listed. They made a list, for some reason, I'm not sure why they did this. They made a list of assets that effectively these brokers could use in their fiduciary accounts and for IRA accounts and things like that. And whenever you do that, people are going to, as Andrew always does, take umbrage on whatever's being left out. And in this case, options were clearly and demonstrably left out. And a lot of people got very up in arms on that. Obviously, the whole industry here, you very rarely see this degree of unanimity of opinion behind any topic. This is a very fractious and fragmented space. People are always at each other's throats to get another 0.5% of market share or volume, whatever the case may be. So to see everyone united on one common front was very interesting and very rare. And so we saw, you also saw, guys like you out there listening to this show, the active retail, writing in with comment letters on this comment period saying, hey, don't get rid of options in my retirement accounts. Of course, it was a big topic again at the Swan CIO conference this week, and a lot of people were still waiting because it's supposed to come out in the end of March. They punted until this week. Well, the final fiduciary rule proposal has come out. It came out yesterday, and we're finally having a chance to weigh through all the 1,000+ pages of this document. So it's not something you can immediately weigh in on, but it seems like the initial concerns have been alleviated. Everyone who looked at this and has been diving into it seems like in their revision to this eliminated the effective prohibition against options in retirement accounts. Everyone from the SIBO to the OCC and others are coming out effectively looking at this and saying, and their legal teams are reviewing it and saying that the final rule doesn't really have that issue anymore. So that is a good thing. However, there was a secondary concern, one that I actually wasn't aware of until I attended this conference this week that was mentioned by some of the attendees there. I think you have to be pretty deep in the options weeds to know about this one, but effectively there was another prohibition in there that effectively limited the way brokers and others in this space can provide options education. That it might be construed or misconstrued in our way of thinking as advice, and they could effectively crack down on that. That always seemed bizarre to me. If these products are so risky that you want to try to ban them from people using them, maybe education might be a good thing to have. But c'est la vie, and the current proposal does not do anything to address that. So that's the one of all the 1,000+ pages and all the other myriad aspects of the space that it touches, from an options perspective, that's the only real risk still dangling out there that should concern everyone out there. But if you were worried, hey, I'm not going to be able to buy a put in my IRA or write a call in my IRA, that at least seems to have been fixed. So that was the top of mind thing. If you couldn't trade them, everything else is moot. That's been fixed, and so that at least has been fixed. Whereas some of the other issues, we're still waiting. Well, this proposal is not done by a long shot. People are gearing up for war on both sides of the aisle and on the Hill over this thing. So it's really kind of interesting. It's not finished at all, but at least hopefully, Andrew, I know you took a lot of umbrage to this. So hopefully you can at least sleep much more easily at night knowing that your clients and mentees over there in the land of the pit can buy a put in their IRA if they want to, if they are so inclined.
You know what? I have nothing to say about this. This is total foolishness. What are they even doing with this? It makes what the thing is, what is the purpose of it? If their purpose is trying to make sure an investment advisor does their fiduciary duty, if you want to ban a bunch of products, so you ban products that might be worthwhile to the client. I don't understand that. The whole idea of the fiduciary is the guy's supposed to find products for the client that fit what they're doing. So if a bunch of guys with propellers on, in the labor department think they know what's going on, again, I really don't have anything there's nothing I can say about this. This is just the most bizarre thing I've ever seen. It's bizarre.
All right, and it is bizarre. Here's what I think, that it's a good cause, but it's done by people without a lot of knowledge on it, to where the ignorance of this really shows through. Oftentimes, regulators won't even know the right things to go after because they just don't know what the problem is in the first place. They're being reactionary to what complaints are. Now, a very valid complaint of the general public is along the lines of, this evil broker sold me this annuity that he made 10% on, but yet I'm stuck in for 15 years and I get paid 1% a year on, but I'll get my principal protected, or something like that. Now, that's a valid concern. I think that needs to be addressed. Now, with that in mind, the thing that somehow got mixed in there is somehow, and this is just my theory, I wasn't in the committee rooms when this bill was being, or when all this was being handled. I believe that somewhere someone said, all right, well, what else do we need to deal with? The brokers just making too much in commissions and having a conflict of interest. What else can we get? This is going to be big, people. This is going to be landmark legislation. Someone in there said, well, they always say options are risky. Why don't we just make sure that those things are not in an IRA either? All right, options are risky. That's a good idea. And so I think that's kind of what happened with this. And thankfully, our industry did unite. Like you said, Mark, it has really felt kind of odd seeing everybody come together like this. It kind of reminds me of right after 9/11, the Democrats and the Republicans were actually being friends for the first time in American history. But I think that with this bill, it was good-hearted but empty-headed, if that makes any sense.
I think you just described most of DC in one sentence there, sir. I don't know. Maybe not.
I think they're evil-hearted.
Yeah, maybe good-hearted might be charitable. You're right. So maybe just empty-headed. Maybe lop the second half off of that sentence, and that's the operative term here. Before we wrap up on the trading block, there has been so much going on. Let me just set the stage for you guys here a little bit. Kind of interesting. Rewind a few years back. Just for some history, the Options Insider have done 2 ever reader choice type awards. We did them about, 3, maybe 4 years ago. At the time, we had a bunch of awards. Our readers and our listeners voted, and the award that they gave to Broker of the Year was a little firm called Options Express. And that firm was so excited. They were really excited that they won, and they put it out in an official release and very excited. And lo and behold, a few weeks later, what's announced, a short time later, what was announced? They were acquired by Charles Schwab. Well, fast forward to 2016, and we decided to hold yet another listener-reader contest. This time was our big options broker madness. We're going to get to the results of who you guys won and which of you won in a little bit, so stay tuned for that, listeners. You guys voted en masse, so thank you for participating. It was really fun, kind of a fun way to mix options in with all the March Madness stuff. And this year, our winner that you guys chose after battling it out for several weeks was TradeKing. And they were very excited. They won. They put it out in an official press release. And lo and behold, what comes out a day or 2 later? TradeKing is acquired, this time by Ally Financial. So I don't know, guys. I'm starting to feel maybe our awards are a little bit scary in their prescience. Every time we give an award, that firm is then very promptly and quickly acquired by another large firm. So I'm thinking every broker firm out there now, maybe even a few exchanges, should be lobbying for our next awards right now, because they are obviously the omen, the harbinger of great things to come for that firm. Kind of weird, huh?
To say the least, yes.
Yeah, that was kind of surprising to me. That news came out of left field. If you're not familiar with Allied Financial, I don't blame you. I wasn't that familiar with them either. You may know them better as their former name, GMAC. They were the car financing arm. If you bought a GM car, they were the ones who came and financed it for you. They, of course, got spun off a few years ago into this Ally Financial firm, a very general finance type firm, saving, investment, that sort of thing. Not so much on the trading side of the space, hence their acquisition of our friends over there at TradeKing. We've had Brian Overby on the show a number of times. Of course, he's representative of TradeKing. They do that show with us every week, our Options Playbook Radio. So we're happy to. I know those guys have been shopping around for a while now. So I'm glad to see they found a good place. And it seems like, from what I've seen on the surface, seems to be a good fit. They don't overlap really in any way that I could see. So kind of interesting. But I think the notion that our awards once again foreshadowed a big development in the history of a firm. Kind of interesting. So the next time we do this, we'll have to be very, very careful, because who knows? Next person, you guys listeners, next firm you guys pick could be the next one up on the block for acquisitions or mergers. So keep that in mind when you're voting. All right, now let's keep on rolling into our next segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the funky portion of the show, the Odd Block, the portion where we dive deep into the dark, the shady underbelly of the world of options, the kind of thing that the folks at the Department of Labor are trying to protect you against. All right, and let's kick things off here with a newcomer to the old Odd Block. We're just going to dive right into it here, listeners. This is Crown Castle International Corp, ticker symbol CCL, as you might have guessed maybe from the name. They're a REIT. They're into the old real estate. Closing today, $86.77, off about 20 odd cents on the day. It's the name that does about 1,200 contracts a day. So from an Odd Block perspective, fairly robust volume, doing about 25,000 today. So a wee bit more robust than usual, a fair amount, you could even say. And what lit up all this paper, what was causing all the tumult out there? Well, you got to scroll all the way down to Jan of 2017 to find where all this paper was going up. In particular, it was the Jan par 110 call spread going up. Looks like paper buying for 85 cents and a dime, so a whopping 75 cents on that $10 vertical, going up, like I said, 10,000 times and a little bit of change. No open interest to speak of on either of these strikes, only about 1,700 contracts. So clearly opening paper. This went up in 2 blocks over there on the Amex. Didn't see anything else going up with this, no underlying or any other trades that might be indicative of what our friends over there are thinking. If you look back on the year that was for good old Crown Castle, this aggressive upside love seems perhaps even more aggressive. This thing has flirted to the downside as low as about 75, so about 11 handles south of where it is right now. And on the upside, pretty much right about where it is, right around the 87, 88 handle right now. So this thing not only has to move aggressively beyond its one-year high, but it's got to go well beyond that for this sucker to start making money. Granted, they got some time. They got all the way till January of next year. But still, I don't know, Mr. Rock Lobster. This one seems perhaps a bridge too far on this one. What's your take here on our friend loving himself all the upside here in CCL?
Who buys out of the money call spreads in a REIT? Who does that? Longa or Tusa, would you say, okay, client, I think this is a money spinner? Because, you know, those REITs, those are really known for their capital gain. So you're going to buy 10% out of the money call spreads. You're going to pay 25 cents to the theoretical, and you're going to do it 10,000 times. And I think that's a great trade.
Well, I mean, some of my clients that, like, for most of my clients, that's chump change. So I say, hey, what the heck? Have a hunch, bet a bunch. Just kidding, by the way, with the DOL law just in place. Just kidding.
Exactly. You got to watch it. So to me, I don't get that trademark. I guess it certainly could make money. Maybe I'm thinking, all right, interest rates are going to go to zero for a long time, so maybe the REIT properties will be more valuable because they generate, you know, real dollars instead of those negative dollars that the ECB is generating now. So maybe something that generates real money like rent, that could be more valuable. So I could see the very bullish upside case. You know, just like pets.com was going to be the next, you know, online pet store, and you could pay 1,000 times revenue for it, or 50,000 times revenue, or whatever that thing was trading for at the time. It could happen. It could happen.
It could happen. I think we can all think of about 15 other ways we would rather express that bullish viewpoint. But our friend here clearly happy with himself. Some about 9-month upside. We'll see how that plays out. We'll fire that in the to be watched. We'll file that, I should say, in the to be watched category as well. By the way, I think I said CCL before. It's CCI, the ticker symbol. If you're wondering why you can't find that in your quote vendor of choice. Moving on. This one's got funk written all over it, Mr. Rock Lobster. I'm not sure where to begin. This is in our old friend VXZ. This is the iPath S&P 500 VIX midterm futures ETN. It attempts to follow a portfolio of VIX futures in a midterm duration, about 4 to 7 months, hence the name. And interesting trade. This one closing today, $11.36, up about 5%, about 50 cents on the day. This is a weird one. We started off over. Well, first off, let's do the stats. This one does about 4,000 contracts a day, doing about 4x that today, doing about 16,000, nearly 17,000 contracts today. And all the love we saw came in pretty much one mega multi-leg trade in June and SEP. And it appears to be an iron condor, but it's not a swap. You think it would be a swap with all this paper, but there's no OI. So it's clearly opening on both. So apparently we have maybe an iron condor time stupid. Go figure on that one. We saw 2,000 of the June 11 essentially straddle going up with the 9 puts, 13 calls out there as the kickers, and then followed up by the SEP 11 straddle going up 2,000 times, followed by the SEP 9 and 13 SEP 9 puts and 13 calls over there as a kicker. Again, it's more of actually an iron fly. The 9 puts and calls appear to be buys, whereas the straddles are straight up blast away sales. All sorts of fun up with this one. We wrote it up on the site as a love your broker trade, and it certainly does fall into that category. Mr. Rock Lobster, I'm not sure where to begin. Why? I guess the question is why, and then perhaps why again.
I looked at this trade and I go, okay, I've probably traded 5 million option contracts in my lifetime, and it took me like 20 minutes to figure out what the hell they were doing. I had no clue, so I had to dig, and I think somebody is selling double iron condors in the VXZ. All I see, all the tails were bid, were all traded very close to the bid price. So normally that means they're buying those. In the body of the flies or the condors were kind of more like mid zone. So it looks like theoretical. They were all priced below theoretical. Usually means paper sells, but both the same trades. I couldn't get like SEP in June. So, and the weirdest part is, so you have a day when you have like the first expansion in volatility in about 2 weeks, and they just come in and they blast out 2,000 iron butterflies or on the first move. Like that's a pretty, they're picking up $1 on the $2 strike. So granted, the risk reward is like a 50% risk reward. So I could see that part, but just blasting all out like that on the first move, not to mention, they are waiting a long time to make that money. I don't know. All I can say is why, you said it well. And I think that's the title of the show. Why,
yes.
Why, and lastly, why? Does somebody do that?
Can you imagine just sweating out all those short iron flies for the next till September in a product like VXZ? That's going to have some tums involved, I think, and perhaps some late nights.
For $1. Okay.
Yeah, more power to you, sir. Go forth and prosper. That's.
I'm feeling this wasn't an IRA trade. This was not something in an IRA.
This was not. This one probably should be banned by the Department of Labor, but no, this one was not. This was not Aunt Agnes in Iowa loading up for her IRA here on some premium, some vol premium. This one probably will be debated more on vol views tomorrow, listeners. Meanwhile, we're going to keep on rolling into our final name going out on the ETFs again. This is the PowerShares US Dollar Index, UUP. It's a bullish one. In case you're wondering, ticker symbol UUP, closing about 24.5 today, unched on the day. This name does decent paper, about 17,000 contracts a day, doing about 36,000 today. So just lighten it up all day. You don't have to go as far out to find the love, all the joy here on this one, listeners. Just got to scroll a little bit closer to home to May. In particular, the May 23s was where this character was just lighting it up, picking up, gobbling up probably more accurately, 25,000 of the May 23s, pretty much right near the offer here, just gobbling up these fairly in the money, about $1.50 in the money calls right now, doing them close to parity, a couple of cents over. So if you're looking at it from that perspective, not the worst execution. This guy, though, wanted to just gobble up some UUP, get bullish UUP, and do it in a big way. Buying calls on an already bullish ETF, kind of interesting. No OI to speak of on this strike, 25,000 here. There is nearly 41,000 open on the 25 strike, so perhaps related, perhaps not. A couple thousand going up on each of those strikes as well. Probably market makers saying, hey, I got to lay off some of this somewhere, and we hit these up here. Either way, a ton of upside going up here. Mr. Rock Lobster, take us home here with our friends just swinging for all the fences here in UUP.
Yeah, that's what it looked like. They paid 3 cents over parity, it looks like, for those. I don't know why you would. Again, stuff trades at prices that I can't quite possibly fathom. You know, how they match that trade. Who's going to sell those? But it's a lot better than, they're basically parity calls, and you have, 99 deltas on them, so you get all the upside UUP. And maybe somebody saw the news from the ECB and said, well, those negative rates, what's the Fed funds rate now, 0.5% or something like that, all of a sudden starts to look pretty good. So the dollar is actually at the bottom of the 1 year range. So what's funny is ECB continues to devalue. The dollar at least is, they're out of the quantitative easing. At least they're trying to raise rates over the next year, but the dollar goes nowhere. So, like I said, just like kind of the standard supply and demand of, macro issues seem to be suspended right now in a state of disbelief. So that's what we've got. That is the post QE world we live in.
Crazy town. I think you can sum up all of today's odd block as crazy town. We will file most of these in the to be watched. In particular, that just mind-boggling iron fly stupid. That's all. You can't call it a swap. It's a stupid. So that's definitely one for the record books. I can't recall a time iron fly stupid ever going up in the history of the odd block here. So that's definitely one for the record books. Speaking of things for the record books, it's time for you guys to hear which of you won in our record-setting M&A causing option madness game. So without further ado, let's get right to it in the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the drill. Hit us up on your platform of choice. Could be Twitter, twitter.com/options, facebook.com/the Options Insider, StockTwits, Options Insider, questions at theoptionsinsider.com, or all of that fun stuff baked into our mobile app. Or, of course, just hit us up on the website, use our feedback form. No shortage of ways for you guys to play along, and play along you did. We just came to the conclusion, as I mentioned at the top of the show here, of our very epic, industry-shaking option broker madness game. Here we are. Just thought we'd have a little bit of fun in March Madness, and what do? We cause yet another massive M&A event here in the broker space. So we'll have to plan our next contest very carefully. But part of that contest was we wanted you guys to play along and win some prizes. And play along you did. The rules were very simple. You didn't have to pick the winner. You just had to play. So if you didn't pick TradeKing, don't worry. You were still eligible for the contest. And a lot of you picked a bunch of different firms. And we set it up so that every time you voted, every time you played, every time you engaged, no matter how you did it, that was a new entry for you to win in the drawing. So if you voted on Twitter and then you liked it and then you retweeted it, those were all multiple entries, each individual entry. So if you then went and voted on Facebook, that's yet another entry. If you went and shot us an email, which some of you did, that counted there again. If you used the website feedback form, all of those counted as individual entries. And we compiled all of those. Yes, it was a wee bit of work, shall we say. I want to take my hat off to my team, particularly our managing editor, Danielle, for sorting through all of those hundreds and thousands of different entries there and we put them all into one massive mega spreadsheet, gave each of your entries a number, and then we fired up the old random number generator to determine our winners. And so here we are, without further ado, the winner of the Kindle Fire tablet is Kelly Small. I forgot her handle over there on Twitter, but I think it's a Zenny Girl or something like that, so congratulations to her. And she also picked TradeKing, so she gets a double bonus there. She actually picked the winner, so it wasn't another one. The Amazon gift card, the winner of the Amazon gift card. Nice to see a regular listener of the Option Block program winning here. He's written in many times. Alex Petrakiev. He wins the Amazon gift card, so congratulations to you. And the winner of that swanky options swag pack, you get a bunch of cool options gear you couldn't get anywhere else. We obviously hit all of the events and things around here. We get a lot of cool stuff. We like to pass it on to you guys whenever possible, so we'll do that. We'll put together a great box, and also as part of that, you'll get yourself some exclusive options insider gear. So send over your shirt size there. And the winner of that is Ronald Yurovich. So there we go. You guys are the three winners. Get back to us soon. We'll reach out to you on your platform of choice as well to inform you of the winner in case you're not tuning in live today. And let us know. Get back to us soon, because otherwise, if we don't hear from you soon, we'll give your prize to the next winner. So people want to win. So claim your prizes quickly. And thanks to everybody who played along. This was really fun. And we're probably going to do it again, because every time we do it, we shake up the industry. So you gotta keep doing it, if for no other reason than to give us other fun stuff to talk about. So we'll think. You got ideas for what you want to see us do next time, or how we could tweak or change, or maybe a firm we didn't add in the contest? Let us know. Or another contest you'd like to see us run? Let us know. We're always open to fun ideas. And moving on to a question here. Tucson, Andrew, both getting angry they're not winning prizes. No, you guys are excluded. There were quite a few people who played from different industry firms that were not eligible to win prizes. So you guys are definitely on that list. All right, moving on to a question here. This one comes from MJHill. And you guys, I saw the first line of this, as I usually do when I'm, sorting through the notes before the show, and I saw this guy asking about buying straddles for earnings. I was like, oh God, this guy doesn't listen to the show. He's asking this thing again. But then I read his question, and he clearly does listen to the show. So I apologize first for questioning you, Mr. MJHill. His question is, question for the option block. With earnings season is approaching, what are your views on using an at-the-money long straddle as an earnings play? I plan on buying the at-the-money straddle about a week before earnings and closing the position the day before earnings are released. I'm hoping to make some money on the increased volatility that comes immediately before earnings, but would like to hear your opinions. Well, Mr. or perhaps Mrs. MJHill, this is, as you know, if you listen to the show, this is one of our favorite go-to strategies. And you could play with the timing there a little bit. Some people might think you should do it a little earlier, maybe a week and a half or so out. Some might say 2 weeks. I think that's a little bit long. I think on a week and a half to a week is a fairly safe range. And of course, what you're betting on there is getting essentially a free or a low-cost swing at the bat there. For going into the earnings, because of course you have all that vol creeping in, offsetting or at least mitigating a lot of the decay that you would normally be paying in that scenario. So you effectively get a pretty decent low-cost way to get out to the plate and try, and maybe you get a huge move in that week. Maybe they pre-announce something along those lines, and bam, you're off to the races, and you didn't pay any decay for it. That's not a bad setup. Mr. Rock Lobster, I know this one resonates for you. This is one of your favorite go-to strategies. This is one of your favorite juice for free or for a very low cost ways to play. So what do you have to say to our friend here, Mr. or Mrs. MJHill?
To Mrs. MJHill, I do like this in certain instances. It doesn't work for all stocks. Generally, I think the lower volatility earnings plays work better than the higher vol earnings plays. I have a couple on, just full disclosure. I have one in Microsoft. I have one in Twitter. So I tend to look for ones that where the vol is a little lower and the dollar value is lower relative to the decay patterns in the past. So I like it. I think it's tougher on earnings straddles that have more volatility in the actual earnings straddle price. I like them kind of small dollary, where there's just not a lot there, and it ultimately is still a realized vol play where you need a little bit of action prior to the earnings to really make it work. So, like Longo just said, you get, like today, if the market craps out, your straddle's worth more money, you just give it back to them. If we see some continuation of this tomorrow, you have a home run. But you need, the stock has to move a little prior to. Generally, that's how they make money, because they pretty much price them. What happens is they price the straddle value. Let's just say, for an example, they price it at $3, right? That's kind of the earnings straddle. That's like kind of 80% expected value, what the earnings straddle will be. They're going to price that thing 3 weeks ahead of time at $3, maybe a little more, maybe $3.25, $3.30, and it will decay much slower than normal. But the volatility is going to go up, but the price of the straddle doesn't change very much because the change in Vega over time gets really small, even though the volatility has to go up a lot, but it doesn't move the needle in dollars very much. So it's a little, there's a little bit of option rigmarole trickery in there. But ultimately, if you get the move prior to earnings, it should pay you some money.
I just like that he said he's not just buying straddles. I like that he has he's been listening to the show. He has a little bit more nuance to it. He's getting out before he goes over the waterfall there, the Niagara Falls of earnings. So well done, Mr. and Mrs. MJHill. Nick, what do you have to say to our friend here who's asking about straddles before earnings, but then getting out while the getting's good?
Yeah, my comment's going to be more from a general standpoint because, I'm not, since I'm on the commodities future side in terms of watching and where my background is in terms of trading. I mean, you could look at this just as an event volatility or an event day, right? So I'll agree with what Andrew had to say. You're going to see that you're not going to get much bang for your buck in that week leading up, and you're going to see that change in volatility that's going to offset your decay. I think you want to look at it too. You want to make sure you're in the right expiration, right? Because you can get in trouble if something comes out on a really short dated ones where anything is leaked early, you'll get crushed on that premium coming in right away on you beforehand. I don't know if that happens so much in the equity market, but you want to give yourself at least some buffer from that standpoint. So I would say look at the days to expiration. That's not like something that's more close to a 30-day or the second option out might give you a little bit more safety as well than just going into something that's the shorter dated front one. But you guys could talk to that a little bit better. But this doesn't just happen. I think the important thing to say here is that this doesn't have to be limited to earnings play. I mean, you can replace earnings with an FOMC meeting. You can replace it with non-farm payroll, all those kind of things. And a lot of my customers and I talk about event volatility in particular, and to the point where we have tools available for them so they can determine, how much volatility that particular day is getting. And I'm sure there's obviously similar things you could do in the equity market, but you can start to get a little bit more deep, like Andrew was saying, in terms of having an idea of what they're going to take out of it if it doesn't move, or what kind of bang you'll get if it does move, that kind of stuff. So my comment was more just along the lines of you can look at this just outside of the equity market and look at it as an event play in general across the asset classes. Yeah, you're right. We're so fixated on earnings here in the equity and index space, but yeah, it could be any event, crop report, call it what you will, FOMC, whatever the heck the case may be. This analogy applies across a broad spectrum of event-type trading. Mr. Uncle Mike, take us home, sir. What are your thoughts here on this particular strategery?
The only thing that I have to add to it that you guys didn't, just to add to what you guys had said, would be that you had mentioned an early earnings announcement, Mark, that could possibly benefit them. Well, it could also hurt if, let's say, it's an early earnings announcement. It doesn't happen often, but earnings announcements do happen early at times, so beware of that. But the disadvantage of that is, what if it's an early earnings announcement? And to quote my man, Mark Longo, what if it's a resounding meh? And the stock doesn't move, and then all the volatility gets sucked out of it. I would say that's the main thing with which you have to be on guard for when doing this.
I'm trying to remember the last time I saw a company pre-announce meh. Usually when they pre-announce, there's something afoot.
Usually it's not, I would agree, but it can happen.
That would be, hey, got all fired up. We had to let you know a couple days early that nothing's happening. I would maybe just sell that company on just because. That's just not a company you want to be associated with. But that's a conversation for another day. Meanwhile, we're going to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block portion of the show, where we break down what we're watching for the rest of this week into the ye old weekend. As Uncle Mike alluded to at the top of the show, we had the FOMC minutes coming out earlier this week, and so that was kind of interesting. Give us a little bit of movement, a little bit of rocking and rolling. We're coming up on the realm of earnings, but not quite yet. So we're about to kick off that roller coaster yet again. That said, perhaps we'll start with you, Mr. Nick. What's cooking, perhaps in the commodity realm that you're keeping an eye on here as the week comes to a close?
I think just from when I've been back, I've only been back 4 days from being gone and not paying attention so much, but it just appears to me that we're sort of in this drift pattern across the board here. I mean, outside of the fact that the equities are down or have been down, but just in the other markets, it looks like we're just sort of on a sideways pattern for the most part. And generally speaking, when that kind of stuff happens, and again, full disclosure from my standpoint, I don't trade anymore, but I do help people sort of look at the data and come up with some ideas and to either get to their customers or for themselves from a trade standpoint. So when we start to get in sort of these drift patterns, we'll start looking at what's coming out in the calendar. For instance, Yellen is talking tonight, so that's something to keep an eye on. We just had a non-farm last week, so that there's other numbers out for the rates markets, but not for a little bit of time. But I'll tend to just start to look at what the current volatilities look like in comparison to the historicals. That's one of the obvious things, but then start to see how the skews are looking to see if the skews are coming off at all, particularly in the 25 delta risk reversal, and then start to compare that in the trend of the put-call ratios as well. So when we're in a market that's a little, for lack of a better word, stagnant or boring, however you want to look at it, and start to be that's when the opportunity really starts to present itself from, picking up on a particular direction or looking for, sections of a commodity, meaning strikes in the commodity that look a little bit underpriced or even calendar spreads that start to look a little bit juicy in comparison to what events they might encompass with each other. So not seeing anything in particular, not hearing anything in particular from my customers in terms of what they're looking for. But mostly I think it's now when you get into this kind of holding pattern, you start looking for ideas because as all you guys know, when it looks dark, there's always the dawn. I mean, there's always movement going to come back into the market, and I think that's what you really got to keep your eye on. And you don't want to get lazy and say, well, not much is happening. So from the commodity side, rate side, that type of thing, I think it's time to start paying attention and looking to see what you do in a directional move.
All right, and speaking of paying attention, Uncle Mike, what are you paying attention to as this week draws to a close, sir?
Just the numbers. I say it almost every week. It's the 2050 level on the S&P, the 205 level on SPY. Just want to see if we can actually do something. We ran way away from it at the beginning of the year. We ran right back to it now, and we're just kind of sitting there again. So something about that 205 number, that the movie There's Something About Mary, I'm going to start a sequel. There's something about SPY 205.
There's something indeed. There's also something about this show coming to a close. That music means it's that time yet again, listeners. It's all the time we have for the Around the Block segments. Also all the time we have for this episode of the Option Block. But before we go, let's go around the horn one last time to see what our cohorts here are working on that may interest you. Starting off in the Duchy of Maine. Mr. Rock Lobster, what are you cooking up in the land of the pit for our listening audience, sir?
Yeah, all the stuff that they wouldn't let you do, the labor department, we are actually going to have a webinar on the 20th, April 20th, for portfolio management using puts, financing puts, just good old education about beta, trying to beta weight, and see really what those puts and portfolio hedging really does for ya. So very educational. Again, same as cost. It's an 8th on 10 lot, and you're actually going to learn something.
There you go. Check it out. Optionpit.com. He always forgets the URL, so I'll do it for him. Optionpit.com/events, I believe, to learn more. Just click around the site. I think you'll find it. And Uncle Mike, what's cooking in the land of RCM Wealth Advisors?
1 week left, folks. It's IRA season. If you have not done your taxes yet and you don't know how much should you contribute, if you should contribute, or what to contribute, you know you can trade options in an IRA right now. And if you want someone to help you manage those options within the IRA, feel free to give me a call. 312-212-3531, or send me an email at mtosaw@rcmfs.com.
All right, and last but certainly not least, Nick, I'm glad you could join us here in our guest host. And where should our listeners go if they want to learn more? Perhaps kick the tires, perhaps even for free, of that very powerful service you offer there called QuikStrike.
Thanks, Mark. Thank you guys for having me. A couple things I'd like to mention. Well, we just released some videos on My Futures Institute. We recorded options introduction 5-piece educational video set. So myfuturesinstitute.com, that's the educational version. CME, partners with them or runs them for the most part. And there's some good stuff by Blue Putnam and other market watchers that is available on there daily. So be interested to get some feedback to see what you think of some of the early educational videos we put up there. Secondly, as always, you can go to cmegroup.com and see our tool set for free. Right now, there's about 10 or 12 different items on there, which will give you access to all the market data that you need from volumes and open interest and changes and volatility curves and term structures, different pricing sheets, that kind of thing, some different tools that are now available. So if you're looking for information on options on futures, lots of free stuff available there. And then again, our service is called QuikStrike. You can register for a free version called QuikStrike Essentials from the CME Group website. Just go search for QuikStrike, and you can find that on their site. And you can also find us at QuikStrike.net, QuikStrike.net, for our regular service. So if you have any questions, feel free to shoot us an email right from either of those places.
All right, listeners, remember it's a funky spelling, QuikStrike. So check it out there if you want to learn more. It's my go-to source for everything futures, options related. I think you'll like it too. Surf on over to CME. Get your access for free. And on behalf of Nick and Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. We announced the winners of the Option Brokers Matters, just tweeted them out and Facebooked them out too. So if you are a winner, congratulations. We'll be reaching out to you soon with more information, hopefully to get your information so we can get your prizes out to you pretty quickly. And of course, thanks for everyone for downloading, streaming, and subscribing, sending in such great questions. Keep them coming. We love to hear from you guys. And of course, for tuning in live, we'd love to see you guys there as well. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.